All eyes on NVIDIA. But what if the AI bubble is about to burst? This is Kenya News Update today. Coming up, you'll discover why a single company's earnings report could send shockwaves through the global economy and what it means for tech investors everywhere. The stakes are astronomical. NVIDIA, the chip giant that powers the AI revolution, reports earnings this week. Wall Street expects a massive 68% revenue jump to $66.2 billion. But here's the twist. The stock has barely moved this year, up just 2% in 2026. Why? Because for the first time, the biggest winner of the AI boom is facing real threats. Meet the rivals. Google is now a top competitor, supplying its own chips to Anthropic, the creator of the Claude chatbot. Google is even in talks to supply Meta, a huge NVIDIA customer. AMD is also unveiling a new flagship AI server. The hyperscalers are designing their own, cheaper chips. NVIDIA's long-held dominance is under siege. But here's what nobody's talking about. NVIDIA itself is stoking the bubble fears. The company reportedly drew out a potential $100 billion investment in OpenAI, one of its biggest customers. A recent report says it may replace that with a smaller, $30 billion commitment. This has investors asking a terrifying question. Is the $630 billion capital spending budget from big tech sustainable? Or is this the peak? The journey to this moment has been a wild ride. NVIDIA powered the U.S. stock market rally for 3 years. It has beaten sales expectations for 13 straight quarters, but that delta has shrunk. The growth is slowing. Profit is expected to surge 62% this quarter, down from 65.3% last quarter. The comparisons are getting tougher. The pressure is immense. To defend its throne, NVIDIA struck a $20 billion deal last year to license chip tech from Grok, boosting its position in AI inference. It also just agreed to sell millions of chips to Meta. The company is fighting back, but the evidence is mounting. The landscape is shifting. Analysts are still bullish. RBC expects NVIDIA to forecast revenue 3% above estimates. Spear Invest's chief investment officer, Ivana Delevska, sees it forecasting sales up to $10 billion above estimates, a 13% beat. Demand for NVIDIA's pricey chips, the brains of AI servers, is expected to remain robust. They're predicted to grab most of big tech's massive data center spending this year. Yet, the tension is palpable. This earnings report isn't just about numbers. It's a referendum on the entire AI boom. Some say this is just the beginning of a trillion-dollar industry. Others whisper we're in a bubble, and NVIDIA's results will be the pin. The implications are global. If NVIDIA stumbles, markets could tumble. If it soars, the AI gold rush continues. But here's the unanswered question. Can one company's chips hold back an entire industry's desire to build its own? The controversy is real. Is NVIDIA an unstoppable monopoly or a king about to be dethroned? The payoff is clear. All eyes are on Wednesday. Do you think the AI spending is a sustainable boom or a dangerous bubble? Drop your take in the comments. Subscribe to Kenya News Update today for more on the stories moving global markets.